and get in the management of Escorts going in just moments from now. But before we get in the company, let's get in my colleague Puneet to talk about the numbers of Escorts and the trends thereof. Because Puneet, I think there is lots to be taken home from the results that Escorts has given versus what the industry-wide picture has been like, right?
Well, definitely. And with Mahindra on one side steadily growing from last year, we've seen that expectations and build-up of Escorts to have some kind of growth in this year. While Q1 might not show that, it's visible in sales, but not visible in the financials yet. So I think that's one of the couple of points. Management is expecting that for the industry, they are anticipating high single-digit growth. Will they be able to actually grow higher than the industry or maintain that share? I think that will be one of the first things that we'll be, quizzing the management on. Apart from that, we'll also see that the margin guidance. Management had said that 12 to 12.5% is something that they are banking on to maintain this year. That will be the other aspect apart from the larger industry as well. So we've seen, the share price largely be flat. Let's also look at the one-year chart of Escorts and you will know the story because for Mahindra, of course, the comparison is that the passenger vehicle space has been doing well, but for Escorts, the tractor segment has been weakening over the last year and there's been some market share loss there. That's going to be one of the key aspects, Neeraj, at least from this results as well. But, let's also welcome in Mr. Bharat Madan, who's the whole-time director and chief financial officer at Escorts Kubota. Mr. Madan, a very good afternoon to you and thanks so much for joining in. In terms of, the market and the industry, I just wanted to first start off with that. Are you anticipating to see that it will be a year where we'll have some high single-digit growth because the base here was largely soft last year for the industry as a whole? What is your expectations for the industry for FY26 as well as for Escorts?
Yeah, so I think if you look at our guidance for this year, we have given the guidance for the industry to grow from mid single digits. It will be anywhere between 5 to 7%. And the reason we said is that because if you look at the last few months, I think 8 to 10 months, the growth started coming in the rural side from September last year. So the second half of last year, obviously the base has already grown because they grew 15% last year too. So obviously if you come to this second half of this year, the base will already be high. So first half we've seen the growth now in the first 4 months, we've seen 8-9% growth happening in the industry. But for the second half to sustain the similar growth will be a bit difficult. Now, that's also one of the reasons. If you look at the growth skewness, it's been more towards the southern and western market, which has grown almost 19% year on year. Compared to that, the market in north and central India, where Escorts has a stronger brand and market share, have grown only 0.5%. So given that geographical mixed issue, so we obviously had some problem in the past few months. But now going forward, I think as you enter the second half, with the growth momentum in the south and western market will slightly slow down. We expect it will get balanced out. So overall, the industry may still show a growth of 5 to 7%, but yes, it will not be that skewed to the south and west as it was in the last 8 to 10 months.
Mr. Madan, when I think of what people are talking about when it comes to the positives for the quarter, this is Neeraj here, of course. Good afternoon. The third consecutive quarter of sustained margin improvement in the agri segment, and that is being looked up as well. I believe some parts of your commentary for the quarters ahead is looked up as well. To your mind, what was the one key positive that came out of this quarter? It could be something that has happened for 2-3 quarters and has continued in this quarter. And what was that one thing that you felt was the sore spot for your company in the Q1?
If you look at the margin for the last quarter, the reasons for the improvement are two. One, obviously, the price increase what we had taken in the first quarter from 1st of May on the tractor space especially. And second was the softness which has been continuing in the commodity prices for last few quarters. So we have seen the aggression. I think it's only in one of the 4 quarters last year we saw some hardening had happened. Otherwise, in 3 quarters last year, we actually seen the commodity prices continue to soften. Same thing we saw in the first quarter also, where we got a benefit of the soft commodity prices, which leads to some improvement and the reduction in the material costs. Obviously, going forward, as we mentioned in our commentary also, there's been some pressure now we're seeing because normally we pass on the material cost increases the lag of a quarter. The last quarter we've seen some metal prices have hardened up, which will have some minor impact in the second quarter margin, which obviously we try to offset with the other cost reduction initiative. but that can have some temporary impact. The pricing benefit will mostly sustain the balance of the year also. I think from margin front, we had given a guidance it will be somewhere between 12 to 12.5%, and last quarter was 13.1%. So if I think the numbers continue to be the way they are, the way we expecting the industry to perform, we think we should be able to hold on to the margin level, and 12.5% will be improvement over last year still.
Oh, okay, so you're saying that you could well nudge the whole time annual number of 13% as well if things hold up well. I mean, our 12.5 seems to be a decent fighting chance.
It will depend on the commodity prices.
Of course.
In the balance 2 quarters. So if they remain soft, then it's possible you can also hit 13%.
Got it.
I won't be surprised.
Just one other question is, and that is when it comes to revenues and whether pricing in exports is better, because I think you've reaffirmed on the con call that you would do what 25% export growth in line with the industry standards. Would that be a fair assessment?
Industry will not grow 25% on export. Our exports have been higher because the base is very low. If you look at last quarter, we grown 80% on export because there's a very low base for the last year. But now we come to a situation where our average export every month is happening in the range of 500 to 600 tractors a month. And that number will continue. So that will virtually translate into 30%, 25% growth over last year export numbers. On the margin front, export obviously is better because the rupee has depreciated. So that's a benefit which is obviously been echoing. So today the export margins are even better than domestic margins.
Mr. Madan, you mentioned, at the start of this conversation that West as well as South markets have done well last year. And is that the larger reason that the base effect could play in for this year, that we could see, low to mid single-digit growth in those markets? And is that the subsequent reason that you're seeing growth in northern markets where you are, of course, one of the major players? Is that one of the key reasons that you're looking at?
So there are 2-3 reasons. One, obviously, the reason what you mentioned is the base for the last year is already high in those markets. So we don't expect the similar double-digit growth will happen in those markets going forward, especially in the second half. Second is the gaps which we had in our product portfolio, which are not really catering to the paddy market. So we are going to introduce new product portfolio now in September, October, which will be essentially meant for the paddy market. The entire wetland series which is getting launched. So if you look at the portfolio of products in the last few months, so in all the brands we introduced the new product now, which was actually filling the gap. So with this introduction of this wetland series, we'll have almost 85% to 90% product application coverage on a pan-India basis across both PowerTrack as well as FarmTrack brand. In Kubota brand, we're still some bit short. We are present in a very limited segment right now, but there the launches will happen maybe in the years coming forward. So in the next 2 years, we'll see more launches coming in that brand too.
And just one question from my side, Mr. Madan, you mentioned about launches. So the Pro Max is something that you've launched that's doing well. You mentioned Kubota, you are looking to fill some gaps. You've launched one of the key products there in the 41 to 50 horsepower category. So that point is also well taken. Your point on South as well as West is also taken. But apart from that, what is leading and giving you confidence of growth in the northern markets? Because in terms of the environment, nothing materially has changed. What are you currently seeing in the ground? And please correct me if I'm wrong on that aspect.
No, one, obviously the monsoon has been above average, so we've seen a very good distribution in the northern and central Indian market. So that's one thing, one trigger which will happen. So we'll have a very good Kharif harvest this year. And I think the variables on the rural side are positive as of now. So including the higher MSPs and the good purchasing power in the hands of the farmer. So that we feel should actually drive the demand going forward. So the only, I think, the headwind which we see and which is still not really clear is in the emission norm, changes, which was supposed to happen from 1st April 2026. Like that really gets implemented, then you can also see a lot of rebuying demand coming up in the last quarter. Even though the industry has represented to the government and to the ministry to defer those norms. So let's see, we're expecting more clarity on this to emerge, in this month in August. That's what the ministry has promised us.
And Mr. Madan, you've spoken that, about the demand and the industry. I think from a growth standpoint, what is the current capacity utilization you are at? Because you're also looking to put up a new plant. I think it's coming in Uttar Pradesh. What is the current capacity utilization and what is the timeline? Would it be that by somewhere around the next 2 to 3 years, we'll see the new plant come in and be ready as well?
So our current capacity is about 170,000 tractors, and we are doing about 120 to 125,000 tractors a year. So still about 70% utilization levels are there, and there's also a scope to further increase the existing capacity to take it to a level of 200,000 easily with some balancing, which we'll intend to do. So from demand perspective, capacity perspective, we don't see there'll be any issue in terms of meeting demand in the next 2, 3, or 4 years. Obviously, unless the demand really goes very, very high, then we can obviously look at expediting the whole setting up of the greenfield facility. Otherwise, we think the existing facility can very well address the requirement for next 2, 3 years easily. And by the time we expect the greenfield facility should come up in the first phase.
And Mr. Madan, what's giving you confidence in terms of the export market? While the base effect is also very favorable for you, and the numbers slightly smaller. In which kind of markets are you currently selling? Is it that the African markets, or is it that you're also selling in developed markets? Because the competition is one of the key aspects in both those areas. So how are you trying to counter that, and what is currently on the ground that you're seeing in these export markets?
Our major exports are happening to the European market, and it's a developed market essentially, and we are selling there mostly through quota network. So if you look at our last quarter export, also almost 52% exports were through the quota network, and that's where I think quota is quite strong, especially the compact tractor which are being exported from India. So there's a larger market in the developed countries for those compact markets, but most of the developed market are for higher horsepower segment. So the lower horsepower is not really very their strength. So that really gets scattered from the Indian markets. But we are also exporting to neighboring countries like SAARC nations or Sri Lanka. We are also exporting to Mexico, to South Africa. So those are also the countries which are, we are catering to right now. We export to almost 80 countries from India. So I think the exports will continue to do well. Yes, the last market I think will enter probably with the North American, which is essentially the US market. So that's still we don't have the portfolio ready for that market. And that's why we are banking on the greenfield project, where we can also start exporting to US market in the long run.
Got it. Mr. Madan, we wish you all the best for all of this and more. Thank you so much for taking the time out and speaking to us today.
Thank you very much.
That's Escorts Kubota with their view. Exports will grow well. Margin expansion has happened, but difficult to predict whether this will sustain. It could depend a lot, or it will depend a lot on commodity prices. They are hopeful that they might do about 13%, but remains to be seen. Okay, thank Puneet as